So despite the recent success of Netflix, there are still some potential pitfalls. Among them, you've got the possibility that competitors will catch up and might do it better. Negative free cash flow and a long-term increase in unpaid subscribers. None of that would be good. So is Netflix strategy a formula for success or a future built on, well, let's call it a house of cards? Let's ask our panel. John Ehrlichman with the story, Arvind Bhatia with the strategy, and Scott Bauer with the trade. John, start with you. You put together a great primer for us on Netflix. This company seems to just keep morphing every 6 months. Where's it going?
Well, I think it's about being there first, right? This is a story in a lot of ways, as we saw in that package, about scale, and maybe less so right now about profitability. You almost think about Amazon and building for the future so that you could put a lot of businesses out of business and obviously keeping those profit margins razor thin. I mean, when you think about Netflix wanting to be very much like HBO, one of the primary differences between the two is that the $8 a month is not the same business model for HBO. And so HBO has been incredibly profitable. But right now we're watching a nice new battle taking place with people being able to buy just a standalone service like Netflix, HBO having to battle back and make its service available on a bunch of different platforms. And absolutely Amazon's out there and Hulu's out there, but the Netflix numbers are very large, so that's why everyone's going to key in on whether that scale is getting more significant, how many subscribers they've got when they report their results today.
Yeah, growth is so key. And of course, Arvind, we have seen a ton of growth, earnings up 400% this year, and yet they're still a third of where they were back in 2011. What gets Netflix earnings back to, frankly, where they were?
Frankly, earnings don't matter for the next 12 to 18 months. People just want to see them grow their subscriber base. If they wanted to push earnings, they easily could by stop investing. But I think their investment strategy is, grow their cash a little bit and then invest it back in the business. So we're not really even focused on the earnings, really focused on mainly their domestic net streaming ads.
And when we talk about Netflix, all of a sudden now we actually have to talk about creating content and distributing content, ultimately, which is more important for this company?
I think that distributing content will be important for this company more than anything else. But what we have to figure out tonight and in the next quarter is whether or not this original content is actually boosting the subscriber base or not. So far, that is unclear because you have binge viewing. When House of Cards comes out and has 13 episodes available, you might see a spike. But, a week after that, do you still see the same subscribers or not? And same thing with Arrested Development or Hemlock Grove or Orange is the New Black. So if, in fact, they're getting a boost, then the strategy of creating original content is working. On the other hand, if it doesn't create a boost in subscribers, then it's questionable.
Yeah. Hey, quickly, John, do you have a sense in talking with the advertising community whether the binge viewing is acceptable for advertisers or if they don't like the fact that it's so lumpy?
Well, I think that you've got a player like Hulu, which has both advertising and paid subscriptions, which is different than Netflix, and I think they're cool with it. I mean, I think binge viewing is the new reality right now, and the nice thing for Netflix is they don't really care about what the advertisers think because people are just buying a subscription. They want it all at once, or they watch whenever they want, and that's what Netflix just wants to do. Give it to you, give lots of it, give you lots of choice, House of Cards, and a billion other things, and hope that you will not stop paying that $8 a month.
Yeah, and give us lots of trade. Scott Bauer, you got about 45 seconds. Having heard everything from our pros, what's your trade in Netflix?
You know what? I love a little bit of upside. I really want to sell volatility, which is, so expensive right now, so much premium. So there's a trade I can do out there where even if the stock goes down, I don't lose money and I'm protected up to 325, about a 20% move. Buy 1 August 270 call. I'm sorry, sell 1 August 270 and buy the 295s. You're protected all the way up to 325. The market right now is pricing in a 13% move. I'm protected to 325, a 20% move. Stock goes down, I lose nothing. And I'm short premium there. So, by buying one and selling two, I'm short premium. Volatility comes in. I can win that way. I can also win on direction.
Yeah, understood. And this stock has certainly been on a tear. Scott Bauer, thanks for joining us. Arvind Bhatia, thank you, as always. And John Ehrlichman, I know we will talk to you later in the show. Thanks, guys.